Good morning. All right. So we pretty much, to some extent, got what we thought would occur yesterday. Went a little further than I thought it would. And the reversals, the buyers just stepped up every time. So it produced this bullish wide range bar. And if you remember yesterday, we went over, the fact that the prior day, that Friday, was a bearish wide range bar to the downside. And so the rally, what we discussed was it should stay in the lower half of the bearish wide range bar. Just keep with a bearish bias, meaning as long with a bar like this, historically, it doesn't retrace all the way back up into not past halfway. It may get into it, but then the selling comes in and forms a tail. So we look for the candle body to stay in the bottom half. Well, that didn't happen. It rallied past halfway. But we still got this mess overhead here, which, doesn't leave us with a great setup, meaning a retest type of pattern. This didn't even get all the way down here. So near this major support on the futures. If it had dropped down into there and we had this reversal, that would be a lot more exciting on the long side because the drop would have created more of a void up above to rally into this resistance area. Whereas now, well, it's not quite directly. There's some room to the upside here, but you can see what we have here. Let me just get a pointer. And you can see this congestion that's overhead. So as you can see, it started to deal with it and dropped off here, and prices have backed off a bit. And topping tail as it retested this area. So the question now for bulls is, well, we just thought to reverse the whole analysis. Well, the bottom of that bar clearly should not be violated on a short-term basis. And for today, it's just the opposite. Now that we got a green bar, we want to see any drop hold the halfway mark in that bar. If it should decline into there, which it's roughly, I guess, right around this area here. So pullbacks toward this bottoming tail bar or this congestion is where buyers should want to step up. And maybe we get, if it stays up in this area, we could be in store for a narrow range choppy day. Now, while this could meet the definition of a 1, 2, 3, I mean, just because of the 3 bars, tomorrow would be the trigger bar. It is not a textbook situation because of the congestion that's directly to the left. So, yesterday's theme was that we were starting off with a mess, and that certainly was the case. And as the selling came in over here, they brought in some shorts, of course, and then it flipped right back up again, and that started some short covering and then additional buying. And okay, it got into the void, which we covered yesterday. Now it stopped at resistance and, still got lower highs and lower lows. And so now this is where I like to say the heavy lifting begins as to whether buyers can really hold this area. It was still in this choppy trading range. Nothing of real significance happened from the higher time frames. You can see the weekly, just nothing going on here. Last week's topping tail was yet to see if it follows through by the end of the week. We had covered the fact that that opened up a little too big. The internals were into a bullish, the breadth was into a bullish territory. So we had a mild expectation that buyers could step up, and if they could get it into the void over here, that it should continue to move higher. And it did. And so now we'll just see how far this can get. And as we do every day as intraday traders, we assess the day to day. Now, let's look at the spiders. They got closer to that major support area. And as it poked down, you see where the buyers began to step up and a bit more aggressively because they didn't wait for it to get all the way down there. So sometimes it does, it'll get all the way down there, and sometimes it'll actually break down through it. So this tells me that buyers are more aggressive not waiting for it to get down there, which would be considered a safer zone in a sense, where the buyers would step up. So they stepped up before. It didn't even hit the 50 MA. And so we'll just see how far it gets. Same story there, but getting a different perspective from the point of view of what I would call the day chart, 9:30 to 4 o'clock versus the futures, which are trading overnight as well. And then we had the that spike into the close. Like Dan mentioned to me, did somebody leak the news about MU? Who knows? We're never going to know. But anyway, there was this spike into the close, and then the earnings came out afterwards. But nonetheless, their markets are pulling back a little bit here, which I guess is supportive of, let's see if the buyers are going to show up again and get this bullish turn to actually follow through. And, seasonality, going into the holiday, that's typically a bullish time, short term, before and after a holiday. And the internals, which we looked at, support that, close to support. So now we'll just see how far it can get. And this was, from a day trading point of view, what a whack in the stick in the eye as to shorts, because as this entered the void, which we covered, there was just the potential for this to collapse and have a huge move to the downside. But the S&Ps held. They began to turn around, and there was just that short covering, and it just looked like a fantastic setup that it could go lower and then install, and there was the rally. And it didn't get to the top of the void, meaning it could have gone even further. It had room to run. But now we see that, it is stalled here and started to come in. So we'll just have to see, does this hold? So on the pullback here, buyers should want to step up here if all this buying that occurred yesterday, real maybe not be the right term, because that was very real yesterday. But from today's point of view, when I say real, is, well, if it declines deeply and closes deeply into this green bar, then you got to question, well, how real was it, other than, short covering yesterday? Of course, on an intraday trading point of view, of course, it's all real, but the market is in a corrective mode here. And last Thursday, we had this beautiful bottoming tail bar, and in other markets, the reversal bars that didn't follow through. What we call green bar ignores. And this goes a bottoming tail bar ignored, and that's bearish. So now the question is, well, is this green bar going to be ignored? And if that's the case, the short side is going to be potentially super profitable trade, because if this fails, I have to believe anyway, and of course I'm going to trade with that bias, that it's going to go down here if this bar fails. It's just logical, common sense from my point of view. Dow all the way back into the red bar. Right? So this was outperforming, I guess, in part, and probably large part, because of Boeing. That was, bullish. And even as the market did stall at one point, Boeing continued to move higher. So it was definitely buyers in control there. So a deep move in. And so we do the same thing. Well, here's resistance right there. You can see it. And so the same story. Does it stay in the upper half of the big green bar during any correction today? Or does it close down below there and potentially get a green bar ignored? Yeah. So it's messy. It's messy. And so, our job is to recognize what we're dealing with and not have our wishes, so to speak, or fears, if you're on the wrong side of things, get in the way of what is really happening in the markets. And so bar by bar analysis, retracements, multiple time frame analysis, all of that keeps it real for ourselves as traders, because our tools is what forces us to recognize what is. When you fight that, that's where you tend to have some unpleasant experiences with losses. So the Russell was super strong yesterday, and that was in part, it was early, but a bit of a heads up in that as the Qs were teetering on the edge of the cliff there and starting to move, the Russell was holding. And then they just rallied and they continued to move up, and they were the strongest market. And that was a bit of a surprise. While they showed a little bit of relative strength on Friday, but not breaking down under Thursday's low. But, just the buyers just came in and force early on. And then they began to consolidate, and, where they are here, they cleared this high. So a bit of a trading range going on here in the weekly, really nothing. So, yesterday was a very strong day. And today we'll just see how much of the gain that can be held on to throughout the day. And bonds are up here. A bit, they're kind of grinding up. And as I mentioned yesterday, as bonds are going up, interest rates are going down. And so we've got this situation with this crazy virus thing that is it really reemerging its head? Or are the politicians going to start closing everything down again? And the recession fears, but meanwhile, the market is holding up here. So, technically, buyers are in control yesterday. We're in the sideways corrective kind of mode, and interest rates going down potentially, I guess, in view that things might close down again. And so this is not a bullish sign, but yesterday obviously was a bullish day in the market. Yeah, mass Clint, they're now required here in down in Miami-Dade in Florida. You have to wear a mask out there, and we'll see where it goes, right? Oil been consolidating as the market has, but up near the highs here. Pulling back a little bit here. Looks like overall, probably a consolidation day like everything else. Gold, still bullish. Look at that bottom tail on the dip there. It's just this long consolidation and just, choppy price action overall, which says, hey, whatever your bias is, long or short, these whipsaws require bigger stops and smaller positions. It's the only way you're going to stay in them, because you don't know when something like this is really going to come back. So, like we say, it is what it is. So here's another dip with, intraday, and now will buyers step up again, or does it go down to the bottoming tail bar? As far as being a buyer, no point in, if you're not in, considering to buy unless it gets above the high of that yesterday's high there. But overall, this says it's going to continue to go higher. And silver, which has been lagging gold, just kind of can't get out of its own way still. But I would set an alert up here, even intraday. Maybe it can get going. And I always want to look at the transports. And they survived yesterday. We spoke about the fact that they were on support, and they held, and they got turned around. So, I guess the short of the long of it is the market is in a corrective mode. It continues to do that. It held near the prior low. The Qs survived yesterday and came back from the cliff. And we'll see if they can hold this low under that low, as I said, at least down here and possibly more, and got congestion overhead. So, the upside, no matter where I look, appears to be limited as far as the market goes. with this overhead congestion. And there's a lot of patterns that are like this. So as always, we keep it in perspective of what is, not what we want, and just keep looking to the left. All yours, Dan.
All right, good morning.
SPX. Oh, there's a quarterly expiration today on SPX.
Yeah, we have 0 DTE every day this week on spiders.
Oh, this is like having a birthday every day.
All right.
Well, let's see what kind of pullback continues here this morning, and if we get a reversal, the put side, the credit spread should be pretty good, and maybe the call side already. Maybe it's going to be, especially with yesterday's reversal, maybe it's an Iron Condor day.
Yeah, I mean, we got a great range down here. Support, resistance. Yeah, we'll keep an eye on it, McGraw. Let's look at opens, weekly options. We have a put spread on Boeing for Thursday. CVS, we legged into a Condor for Thursday. GDX put spread looks great. Google call spread. Lilly. Actually, I just noticed here. Google actually stopped us out at a profit into the close. So I will update that. We have 2/3 max profit already. Lilly, put spread and long stock in the swing letter. Qs, we have a call spread for Friday, but we also did a directional put spread. We'll keep an eye on that about, an adjustment, either tightening stop or maybe even adding a put spread to it, which would just have the effect of lowering our directional bullishness, our bearishness of it, taking in some premium on a put spread. SMH, we have a call spread, expires Friday. The strikes are 153, 160. So we just need that ticking melting ice cube to melt square. We have a call spread for Thursday. Wow, I'm not going to even go over these quite yet. we got 20 opens here, and I don't see any problems with any of them. So unless you have a specific question on them, I'd rather go to new gappers here. This thing gapping up to 18 bucks. But it's, looks like another toy that came out of hibernation. No pattern right here. THM. Yeah, we bought that yesterday as a core. I don't see it doing anything yet. I'm not sure what your question is. Our stop is Friday's low. PRTS 950. Yeah, that's a nice little breakout. Yeah, let me put him here. Parts is parts. Ed, yeah, I maybe right now it's back up to 165. So yeah, don't let one little print scare you. A little core trade we got into yesterday. Look at this little beautiful thing. It's perfect. Daily, weekly, monthly. So we bought that as a core. Shit, I didn't post it. WTRH. I'll add that in a few minutes. But I'm in it. Looks great. GLD down a little bit, but put spread. Look at workhorse here. bottom right. Gold 1, 2, 3 down. Yeah, they can trade over these highs. That's a put spread, sure. Workhorse, it's gapping up again. This thing will come back to earth. Like I said, could it double from here? Sure. Who the heck knows? But it's, to us, it's definitely not the time to get on board. So I'm going to be looking to sell a call spread on that once I get a reversal. SPG, Simon Properties, there was an article, and I guess that's what got it moving yesterday, about reopening some malls and then getting paid. There was someone on CNBC though today. Where was he from? Actually, he was from Starwood Properties, the CEO of Starwood. And he was talking about the same grim realities that I've been saying. It's like, look, yeah, you got all these artificial numbers. I was reading another article about the banks, that they're like flying blind and trying to give loans to people because they don't know their credit worthiness. It said that it said over 100 million people are taking advantage of the deferred paying your banks if you got a federally backed mortgage. So, and that they're not required to put that on your credit app, your credit history. So the banks are like, I don't know what's going on here. And so, if they don't get the money and the money runs out, whatever month it is, October, no, I understand. I was just telling you about it was his view on the economy. He was talking about hotels, restaurants, malls. Right. Yeah, one's a hotel, one's a mall operator. But I was just saying I agreed with his assessment that, if we don't get a bailout, or if they don't, and you get a second wave, there's going to be a lot of pain down the road. Charts don't suggest it right now. The paper said yesterday's market strength was in anticipation of the Fed bailout that we talked about. So anyway, it said, the article said they have like $8 billion in cash and a credit line. So I have this on my list for a put spread. Netflix is creating some activity in the minority owned businesses. In MT Live last week, we showed you 3 charts of those parabolic ones, this being one of them, which is a radio station. This thing blasted off with the riots going on, and then the speculation that, we're going to get more money into minority owned businesses through legislation. That's what caused these things to blast. So now Netflix, I think it said they're taking 20% of their available cash, and they're going to direct them to these minority-owned focused banks. So this one's gapping up. No pattern, but let's look at the others here. I wrote this one down wrong. What's the one that sounds like LCAWH? I typed it wrong. But Carve is one here. Look at this crazy gap. I mean, does anybody, I mean, I didn't believe the move up. And we will totally trade manias like this because we trade people, so to speak. And if the Robinhood groups, I guarantee you, Alex, do you want to bet $1,000? I guarantee you, these minority-owned businesses, some of them are going to be on the top 10 list at Robinhood today. So the point I'm making is, we will trade the toys, even if I don't, believe. I think it's a stupid euphoria. But look at this. So Netflix is going to put some cash in this bank. And do you think the fundamentals of Carve is worth a gap up to $16? It's just mind-boggling to me. The just this stupid. You know, what's that book, The Madness of the Crowds? That's what we're watching right here in real time. The madness of the crowds. Let's continue. Uber. There was in the news that they might be trying to buy somebody, I forget. All right, here's that. Here's another bank, little bank thing. Now this pattern is better than the other one, but it's still extended intraday. Look, this stupid thing went $1 to $7, just in stupid madness of they think their net worth, when not their net worth, their shareholder worth, shareholder equity. Pola here, don't know what's going on with this, but bullish breakout. That's worth watching. I'll just leave it there. All right. Start, yeah, rumor buying Macy's. Yeah, they were talking about that. You know, no pattern, but you're, you know, kind of on the basement floor if you wanted to play that game. Xilinx raised guidance. No pattern, but maybe put spread. Oh, the old MU. MU is a put spread candidate. Had earnings, so the juice should be good. Let's keep an eye on that. Jeffrey had earnings, gap in 16. That's another put spread candidate. Miller Herman was gapping down. But this is a put spread candidate. Oh, Lulu. Oh, Lulu's actually a problem of ours. We shorted the breakdown yesterday, and so it's gapping over our stop. So I moved stop to 30-minute high, but they're buying a company. They're buying a little home exercise company, 500 million. So we obviously want to keep an eye on the competitor Piton, gapping down a little bit. MEI, no pattern. CAG, 35 bucks. No pattern, but put spread candidate. AYI, 100 bucks. Big gap, no pattern. Eli. For me, it's sloppy. I personally wouldn't have any interest unless it took out a 30-minute high. All right, Carve, we already have looked at. Zine, 362, so this one's getting whacked. I don't know what they do. It sounds like a bio. LCA. That had a big old gap yesterday. Gap in 16 now, but no pattern. Blink. This had a nice gap yesterday. The gap's too big though. But I was saying some of these. This sector I want to keep an eye on. Office Depot up, but no pattern. Expedia, no pattern. SMH, we talked about, we got a call spread. VIPs, I like over yesterday's high. MU, we're going to watch. RAD here, I like, I posted a put spread to our subscribers. THM, this is the little stock we bought yesterday. Neil, give it 5 minutes. That's our general rule. GAN is an IPO I want to watch. It's holding well. Here's our little IPO from yesterday, not IPO, our new core trade from yesterday. Uber, there's no pattern in Uber. XLE, yep,